Okay, we're back, folks, and we have Mr. Z from Philly on the line. John, how are you today?
Larry, I'm very well, thank you. Thanks for doing that IWM. That's fascinating. But I would like to ask you if you could pull up the bond futures daily contract and share with me and your listeners what you're seeing right here, please.
Okay, I think the best way to do this, in fact, you'll be able to see it quite easily here. I'll put up I have the weekly right at my fingertips, and this will be easy to see because you'll notice that we've been down here for about 5 or 6 weeks, and we stopped pretty close to the 78% level at that 149 and change. What we're looking for, John, is a small counter trend rally. Probably somewhere between 3 to 4 points to take us up around that 152 is a max, I would believe. We're trading at 150 and change right now is what I'm looking at. But this has a very bearish connotation, as you can see, because of the fact that we had almost a yearly rally that took us only to the, well, it was 9 months to take us up to a 382. This is really bearish. I mean, you can see it in the notes. The notes have already broken down below those lows of 2017.
Great. Thanks for sharing that. I hope that I hope, as you've rightly pointed out in the past, hope is not a good thing to have in your mind when it comes to trading, but being prepared anyway to short a bounce should we rally from that 149 low towards 152 or so. Mm-hmm. That's an idea floating in my mind as well, and I'll just wanted to share and repeat something that you and Bill Meridian talked about on Friday, January 5th, when he was last on your show. He went through all his cycle work, and Bill made a very big point of highlighting the cycles for bonds that show from late February into March as being a cyclic time to expect meaningful weakness, a decline phase in the bond market. And here it is, January, mid-January already. Perhaps the fact that we're not falling is because cyclic weakness is at least on Bill's work, not showing up till late February, March. So I'll be prepared should we get that bounce up to 152. Just to follow up, if we break 149 now, given we've had just a feeble bounce, would that be a pattern that you would actually short a breakdown, please?
Well, John, that's some people are very aggressive traders, and I used to be in my younger days, but now, I'm in the 7.5 furlong and an 8 furlong race, so I'm a little less aggressive than I would like to be. But some of the people that I talk to, of course, are very aggressive, and that's what they probably will do. Now, remember, when you have breakouts like that, we're also forced to look at a possibility of a false breakout, and that's what a professional trader will look for, because if he doesn't get any follow-through after the breakout, he's going to be very nervous, and that's where he'll either tighten his stop or reduce some of his position because it's not acting the way that he expected. But I agree that if we get below that 149 level after this little bounce that we've had here in bonds, you could be looking at 142 and possibly even below the 140 handle in these things. Because remember, these things at one time traded at 55, so that's a long way down. I don't think they're going to 55 again, but we could easily see rates back to 4 or even 5% in a 30-year Treasury bond.
Very good. Thanks so much for that. I will. I think I'm going to join that group of people that you referred to. That if we do break the 149.03 to make sure
the ideal
I'm grabbing
situation.
that, and if it doesn't follow through, keep your losses small. So,
That's
thanks
correct.
very much for that weekly chart. Yeah. That's fascinating.
Yeah, John, one of the things that when you do a breakout, and I know you did some of these in gold because I watched your posts into the den each day, is when the market is really strong trending, much like we have in gold. Once the market breaks through these old resistance levels, the first thing you want to do is to see green lights on your equity, because that means it's working in your right direction. Because if it breaks out and doesn't continue, that's telling you that there was not a lot of follow-through buying at that key level, and that's where you want to get nervous and either exit the position or raise your stop, substantially. So that's, all about risk control, and you don't want to be too greedy. That's the main thing. I have never been one to pyramid, John. I've done okay in the markets, but I've never been a person that pyramids on positions, and I've never done that. I mean, even during my days at Drexel and all through the time frame, the 60, well, it's been 59 years I've been trading. I've never been a pyramider. That's the main thing. But I will tell you this, John, you're going to love this story. I have a friend who actually worked for me for a couple of years. He was doing some work on automatic trading and artificial intelligence, and Ace got a job at Google 4 years ago. So he went up to Google, and he was in the home office and everything, and he was there for a year. And his area of expertise was they were looking at blockchain modeling, 4 years ago. He saw it as a great opportunity, and he was from Bulgaria, but he has dual citizenship, and he went back to Bulgaria and got a couple of investors to go in with him, and they started to get into Bitcoin. This was 4 years ago, if you can believe that. We're talking about 2012, when it was trading at around $5. John, he has made personally, he told me yesterday from Bulgaria as we were chatting on Skype, over $100 million on a $5,000 on a $5,000 investment.
Oh my Lord.
Yeah, and I said, wow. And I forwarded that information to Sarah, and because she knows Ace also, and she was very happy to hear. He's a really nice young man, and he's quite philanthropic. But he just said, I just got lucky, and he said, I just knew it was going to work, so I just kept buying more and buying more and buying more. And I asked him, are you still in it? And he said, well, I got out a lot of it at 12,000. And he said, but he still has about 20% left, and he was just going to hold that because now he's been able to take care of just about all of Bulgaria. Anyway,
yes, absolutely.
That's the first big story I've heard. That's the first big story.
Have found his way into that.
Yeah.
That job at Google that introduced him to a world he presumably never saw before.
Yeah, he got paid $250,000 to take this job at Google because he was one of about 5 or 6 people that made it to the finals in this thing, and he got the job and moved from San Diego, and then he, basically since he was there a little over a year and a half, and then he said, I have to do something about this, and it turned out I think he's 31 now, so he's pretty young.
Gracious. All right, thanks so much.
Hey, thank you, John. God bless, and Happy New Year to you.